What's the way forward? Let's get in those details from none other than Mr. Sushil Modi, who is the ED Finance at Macrotech Developers, joining us. Hi, very good morning, Mr. Modi, and thank you so much for your time. Firstly, in the quarter gone by, we have seen a great set of numbers coming in from your company, so congratulations for that. But an outperformance indeed with respect to the growth that some of your peers have shown. Firstly, help us understand that what drove this sort of a performance for you, and what are the broader sectoral headwinds, if any, are you envisaging right now?
Morning, Aisha. Thank you for having me here today. So, this is while the structural trend of the housing industry in the context of our country, in any case, remains very, very strong, and which is what makes us to say that in our country, the real housing is, going through perhaps, 2 decades of structural uptrend, knowing pretty well that the home ownership is so low in our country. And now, as a differentiation in terms of our business strategy, where we have made our business very, very micro market led and with an orientation of a supermarket, where we try and kind of, make sure that our product is being made available in every 2 to 5 kilometer radius, because that is where the demand sits. That leads to the granular strategizing of the business, and thereby delivering year on year growth. In fact, so much so that last 4 years we have grown at 34% CAGR in terms of our pre-sales, while investing big time in terms of the business development, where just 4 years since listing, we have added the land to the tune of around 78,000 crore worth of gross development value. And that too all happening alongside when our debt has continued going down. It has come down to 25% of what it was 4 years back. And all of these is being clearly visible in terms of our where we stand, in terms of even our rating, where we have reached to the AA. So it's a granular, strategizing of the business by market, not even thinking Mumbai as one market, breaking down the Mumbai into 7 micro markets, and then going to the Pune, following the, our usual pilot strategy of entering into any new city, where we don't expose ourselves too much to begin with. We do few projects. We understand the local landscape, the local regulatory framework, and important, create execution capability on the ground there, while to understand the consumer. And then once we have achieved the success, we really look for growth. You just see the numbers. The Pune, 4 years back, we were delivering more like 200 crore of sales. And now the last year we have ended at 2,500 crores. So you can understand the 10x growth, exponential growth, once we have kind of gone into the growth stage, how big we grow. So is the Bangalore story. We had gone into Bangalore in 2022, but with a very, very, very measured manner. And today the everything is visible. Now we have achieved the success, created the execution
Right.
capability, and from this year onwards we are looking for growing there.
Absolutely, and it is the strategy that has worked well over the years that you've adopted, and that's one of the reasons why the outperformance coming in the quarter gone by. A very good morning to you, Mr. Modi. This is Shell also joining the conversation. And while talking about your numbers, I want to talk about your margin figure, because that one has seen a substantial uptick in excess of about 200 basis points on a year-on-year basis. I want to understand, firstly, is this sort of a margin sustainable going ahead? Do you think you will grow at the same pace when you talk of the margins? Also, how are you managing your costs?
See, that's the beauty of our industry, and which needs to be thoroughly understood. The one hand, and this is the equation of cost versus price, and obviously the margin is a difference between the same. So on the price side, we are very clear that for our industry to succeed and succeed big time, and thereby the 2 decade cycle to continue growing year on year, what you need is to make sure that the affordability never gets dented. And when we say so, what do we mean? Effectively means that while in our country the typical salary growth perhaps happens at more like 8-10%, the price of our product housing should grow at least 2 percentage points below the salary growth, which means the potentially 5, 6, 7% at best, the price of the housing should grow. And when that is growing, now that obviously creates effectively a wealth domino effect in the minds of the consumer, because consumer, while buying, effectively consumes the housing, because that's an end use, but nonetheless consider it as a wealth, because it comes handy in times of retirement and whatnot or any exigency. Now look at the cost side, as you rightly pointed out. Our cost, to be seen in the context of the fact that we incur our costs, within a gestation period for any particular project anywhere between 3 to 4 years. And between 3 to 4 years, the cost, if you take the breakup, and we have given the breakup in any case, the commodity never end up in going too high for too long. It may go high from here and there, for a period of, let's say, 9, 12, 15 months at best, but thereafter it is bound to kind of demand supply starts kind of navigating and balancing out, and thereby it kind of tapers down. And so is the story of, even in the current context, 2022, with the Russia Ukraine war, all the commodities went skyrocketing, but then kind of 12 months later all kind of taper down. So what we have seen, and kind of given the knowledge bank in our information, that on a CAGR basis the cost has grown more like less than 2%. So when your cost grows less than 2%, because in any case 30 1/3 of our cost in any case is more labor, right, which is not bound to see undue impact on of any rise in terms of inflation and whatnot. So that being so, you can grow the price of the product at 5, 6, 7%, and the cost is growing potentially, let's say, 2, 3, 4% at best, which means you have all the right levers in place to potentially expand your margins year on year. And which is what, the only thing that can go wrong in terms of the industry is if the price grows disproportionately, denting the affordability, and which is what we are very conscious of and not wanting to do that.
Modi, you have guided for a 21,000 crore sales guidance. That's for FY26, which is actually 16% higher than the sales achieved in this particular fiscal. What's driving this confidence, and where do you see the demand headed?
So as I said a minute back, that demand in any case in our country is humongous, because we have a home ownership, perhaps in more like early 20s. And that being so, the trajectory going forward is going to be huge. Obviously, if you see now segment, and again, just to make a point, that we are the only player in the country who kind of participates across the demographic segments, from the entry level mid income to the entry premium luxury, super luxury. So thereby meaning our business is so diversified that is kind of not dependent upon, be it on any particular demographic segment, on any particular location, or on any particular project, or on any particular city. So with that kind of diversification, and when you know that the interest rate reversal trajectory has started, because when in last 3 years interest rate raised by gone up 250 bips, obviously it has created a bit of a dent in demand on the entry level mid income segment. And with the reversal trajectory having already been commenced, 50 bips already, repo rate has gone down, and perhaps will go down further 50 to 100 bips. That means there is going to be a phenomenal tailwind that would be coming into the mid income segment. And that's what gives us the confidence. And equally important is the consolidation. The way the industry is now getting consolidated, if you notice, by now around 30% of the demand in any case is kind of is consolidated across the top-notch brands across cities. So that means there is no reason that this industry now don't go towards consolidation beyond 50% in years to come. And which means even if here and there something has to go wrong for a year or two because
Right.
of the global macros and whatnot, like in current year we may talk about Trump tariff. So that will perhaps dent the so-called tier 2 and the tail.
Okay.
The top-notch brands is only going to kind of grow and grow big.
Absolutely, point taken, because you have a lot of a legacy to prove, also the fact that why you are in the business. So that's one of the reasons why what separates men from boys. But I wanted to understand about your FY25 business development guidance. You've exceeded that actually. If you could help us understand what's your strategy for further land acquisitions, any micro markets that you are actually bullish on. You did speak in depth about Bangalore, you spoke about Pune, you did speak about Maharashtra, Mumbai in particular. So what's your take? Are you looking at any other micro markets at this point in time and your land acquisition?
So obviously, whichever city that we operate, and thereby in each and every micro market within that city, we will continue to look after the land, because obviously that's our forte, and we will continue to capitalize. In any case, we keep at any given point of time the land to the extent of effectively 4 to 5 years of supply in any micro market. So thereby Mumbai, Pune, Bangalore, where we are already there, we will continue kind of growing and doing business development, and that guide kind of indicates that. In fact, Bangalore, where now we are going into the growth mood. Thereby, you will see the exponential growth coming from this year onwards, and which is what in last 2 quarters alone we added 3 new locations in Bangalore market vis-a-vis 2 locations that we had in last 3 years. So means we have entered the year with 5 locations in Bangalore, and thereby all set for the exponential growth being delivered by Bangalore too, just like Pune. So thereby these 3 markets will continue, but as part of our granular strategy, once we get into a growth mood in any particular city that would have been in the pilot mood before, that's the time we look for one more city to be getting added. And so this year we are targeting one more new city to be added. But needless to say, our strategy will continue the same way like for Pune and Bangalore, where we will be entering into and looking to grow in a measured fashion as a part of the pilot, potentially do few projects, repeat the same thing what we did in Bangalore, understand the consumer, understand the regulatory framework, create execution capability on the ground, because we don't like things being driven by the central office, because they have to deliver the P&L there. So all of that would take time. So thereby, yeah, one more city you should see we getting entering this year.
Can you name that city, if at all possible?
Sorry?
Can you name that city, if at all possible?
No, yeah, we are looking at NCR seriously. So there is a good chance that potentially that's the city that we would be aiming for in this financial year.
Modi, looking forward to that. Thank you so much for taking the time out and speaking with us, and all the very best for the new entry.
Thank you. Thank you a lot.
If you like this video, then like, share and subscribe to ET Now.